Alex, welcome to Investor Stream for the first time, fresh off a series of very exciting exploration developments over the past few weeks. Let's just get straight to it. You've clearly had your foot to the floor since listing on the ASX mid-year, with over 10,000 metres of drilling completed across your flagship gold projects in the Gawler Craton. Earlier this week, you reported the discovery of a new 800-metre gold zone at the Tunkillia Gold Project. Can you just start by providing a high-level summary of the key takeaways from this latest discovery?
Yeah, thanks, Alex. Look, it's certainly been a very busy period for us since we completed our IPO at the end of June, and we are very happy with the recent outcomes from post-IPO technical programs. So, among other things, that's included ground-penetrating radar at Tarcoola and drilling at both Tunkillia and Tarcoola. At the Southern Hub, which is our Tarcoola and Tunkillia gold projects together, we're already very rapidly expanding our mineralized footprint. So, we've had a number of very attractive drilling results across both projects, and those have confirmed our predictions for significant extensions in mineralization at each.
Thanks, Alex. Now, you mentioned the Southern Hub there, and let's just stick with progress at the Southern Hub for now. Drilling at the Tarcoola project recently confirmed southern strike and depth extensions to the shallow open pit. How significant is the extension of the mineralised envelope at Tarcoola in terms of unlocking the project's true regional potential?
Yeah, thanks, Alex. Look, we've invested really heavily in pre-drilling technical work at both projects. Now, in Tarcoola and Tunkillia, we're seeing this translating into new discovery with every single technical work program that we've undertaken. That includes both pre-drilling geophysical programs, but the drilling programs themselves. So when we look at Tarcoola itself, we have now significantly grown the mineralized profile of the Perseverance mine, which is the mine that was originally mined during 2017 and 2018. And that includes a sort of a 200-meter depth extension at the richly mineralized southern end, as well as a 350-meter shallow strike extension. So it's pretty significant. When we're looking at what does it mean for the region, the drilling is, those extensions there on the drilling, really just on the pit. In addition to those extensional discoveries, we've also identified over 25 shallow targets within 1.5 kilometers of the Tarcoola open pit itself using ground penetrating radar. So that's really just a hint of what we think is the bigger picture for the overall project, which is more than 1,200 square kilometers and where we have dozens of other large targets off the mining lease. When we pair that with Tunkillia, where we already have a 965,000 ounce gold deposit, and we just discovered another 800 meters of mineralization, we're really focused on the larger scale combined potential of these two neighboring project areas.
Thanks, Alex. Now, just on that, are you able to elaborate on the bigger regional picture at play here? Obviously, you not only have a growing mineralised footprint of over 1 million ounces, but you also have an established pathway to production via existing infrastructure. What are some of the other gold projects that we might be able to use as a comparison in terms of potential upside and trajectory for Barton Gold?
Yeah, thanks. Our plan is to establish Barton as South Australia's leading independent gold developer and producer. So our exploration strategy in that regard is really aimed at building large scale into our existing mineralized footprint, then scaling it up into significant resources growth and a development plan. We're really focused on that Southern Hub as having real scale potential. Now, when we look at our development plan, we do already have a strategic advantage in the region as we own the only gold mill in the Central Gawler Craton. So that's what we call sort of our northern hub. And it gives us very strong optionality to consolidate resources and tons of material in the vicinity of that mill. But in time, with a second mill at Tunkillia, we'll have a flexible infrastructure solution, which will give us the potential to process ore from an area with approximately 500 to 600 kilometer diameter in the Central Gawler Craton. So that's really, I think, something that would be quite a competitive advantage for us. And when we look at who might investors look at for potential comparisons, whether in terms of resources or project styles or even valuation, there's a few sort of salient analogs out there. We look at Tarcoola, and what we see there is a shallow historical high grade mine that wasn't drilled or extended under the mine. And last year and the year before, Spectra Metals was a fantastic example of a company a great team, great company that went in and acquired an asset that they then drilled out to depth and ended up selling to Ramelius Resources for a few $100 million. Now, the comparison there is that we see similar high-grade extents of the Perseverance mine, but we also own the mill, whereas Ramelius Resources needed that mineralization for their mill. So we kind of have both sides of that trade, which is very interesting to us. And when we look at Tunkillia, it's a very distinct style of mineralization, large, broad, continuous mineralization lower grade, but of significant scale. And there's kind of two people that we look at in the market as comparables for us. One, Anglo Australian Resources is another really good example of this type of profile. They've got about a $40 million enterprise value, and their Mandilla project has got about a 500,000 ounce resource at 1 gram per ton. So if you compare them to us, and we've got about a $20 million enterprise value, we have twice the resource ounces at Tunkillia at 1.15 gram per ton. And that would put us at a valuation of about 25% of Anglo Australian Resources' current valuation. But we, of course, also own the Tarcoola project as well as the Central Gawler Mill. Looking bigger picture, longer term, look, it's perhaps a bold statement, but we look at De Grey and we really see the potential of Tunkillia to start to look like a similar to or look like another Hemi project. So when you look at the geology in these two projects, they have very similar geometry. De Grey recently put out a scoping study talking about an indicative development profile for that pit. The difference is that currently De Grey have about 6 million ounces at Hemi, and we've got about 1 million ounces at Tunkillia. They have defined a resource to 500 meters depth, and we've only drilled the 223 deposit to 250 meters depth. But here we go, we're adding additional mineralization. We see, in the 223 North discovery, we're adding additional mineralization. We see potential to grow that. And, looking back across time and, what's the potential here? Well, 24 months ago, De Grey was a $30 million company, and now they're 1.3, 1.4 billion. So if we can continue to build this out the way that we see the potential on these kilometers of strike of potential mineralized structure, we think that is a fantastic target to be aiming for.
Thanks, Alex. And just finally, clearly we can expect a steady flow of updates from your work programs in South Australia. Can you just give us a bit of a rundown on what the schedule looks like over the next 6 months, and what should we be keeping an eye out for?
Yeah, look, we still have a number of results coming back from our Tunkillia Phase 1 drilling program. So our recent announcement of the 223 North discovery at Tunkillia was sort of just the first half of our drilling results. We're still waiting for drilling results from area 191, which is a satellite target about 3 kilometers to the northeast of the 223 deposit. And we're also waiting for some drilling results from the central area of the 223 deposit, where we're testing some really interesting anomalies or potential sort of repeating structures that we can see in our geophysics and some historical data. So we'll be getting that news flow in the coming weeks. We'll also be getting back the regional gravity surveys that we shot at Tarcoola. And then we'll look to integrate that regional gravity survey data with our recent ground penetrating radar, last year's high resolution aeromagnetics and regional seismic reprocessing, basically to update our regional 3D package or our regional 3D inferred model, and then get out early next year with a very aggressive drilling program or programs to target our highest priority targets, both on the mining lease and on the exploration license at Tarcoola, and of course, some additional follow-up and hopefully additional extensional and discovery drilling at Tunkillia. So to do all of this, look, we've done an incredible amount of work in the past 4 months. We will keep up that work pace. And probably important to note, we are very well funded. So, we had over almost $13 million at September 30 quarter end. So we are very careful with our capital. We are very efficient in our discovery. We remain very well funded to sort of keep up the pace. And of course, through that, we'll be hoping to put out hopefully a very interesting mineral resource estimate update sometime around mid-year next year.
Thanks, Alex. Really appreciate you joining me today. There's certainly a few milestones that we'll be keeping a close eye on the horizon. But as always, thanks for joining me and all the best.
Thank you.